All right, today we are diving deep into a book that's basically required reading for any serious trader, Mark Douglas's Trading in the Zone. We're going to unpack the core ideas and figure out why your real-world smarts might actually be what's holding you back in the markets and what it really takes to win this game.
So let's just start with this paradox that sits at the heart of it all. You see incredibly smart, successful people, doctors, engineers, entrepreneurs, people who are masters in their own fields, and they get absolutely crushed by the markets. Why does that happen?
You know, the typical answer is they need a better strategy, or maybe they need to analyze more. But that's not it at all. According to Mark Douglas, the answer has absolutely nothing to do with being smarter or finding some kind of holy grail system. The real problem is somewhere else entirely. And this is where the journey begins for almost every trader, and what's called the dilemma. It's that incredibly frustrating gap between knowing what's possible in the markets and then looking at your own account balance and seeing a totally different and usually painful story. This quote just nails the problem, doesn't it? You see a setup, you call the direction perfectly, and you're right. But you're watching from the sidelines, just thinking about the money you could have made if you just pulled the trigger. Douglas calls this the psychological gap. And this space, this gap between knowing what you should do and actually doing it, that's where most traders live and die. It's a place filled with hesitation, with fear, with second-guessing yourself, and it is the #1 killer of consistency.
And here's how that plays out. When you first start, you're in this carefree state of mind. Maybe you win a few trades right off the bat, and it feels so easy. There's no fear at all. But then it happens. You take a big, painful loss. And just like that, everything changes. The carefree attitude is gone, replaced by real emotional pain and fear. You start blaming the market, and where you were once eager to trade, now you can barely bring yourself to click the button.
So after feeling that pain, the trader naturally goes on a quest. But here's the problem. It's the wrong quest. Instead of looking in the mirror, they look out at the market, totally convinced a problem is out there, not inside their own head. And this kicks off a vicious cycle. You have a painful loss, which makes you feel like the market tricked you or betrayed you. So what do? You go looking for a better system, a holy grail that promises you'll never lose again. Of course, since no system is perfect, you eventually take another loss. And the cycle just repeats over and over, all because the root cause, your mindset, is never fixed. This really drives the point home. More information is not the answer. As Douglas points out, some of the absolute best market analysts on the planet are just terrible traders. And why? Because analysis and trading are two completely different skills. One is about gathering knowledge. The other is about execution under fire. Okay, so that leads us to the big turning point. The real breakthrough happens when you finally realize the game isn't about predicting the market's every little wiggle, it's about managing the chaos inside your own mind. The entire focus has to shift. You have to let go of the need to be right on any given trade and instead make your goal to be consistent in your actions. You switch from analyzing charts all day to analyzing yourself, your fears, your biases, your reactions.
And this is the goal: to build a mental framework that keeps you disciplined, focused, and confident even when the market is going completely haywire. It's about becoming psychologically immune to the things that terrify most other traders.
So how in the world do you build a mindset like that? Well, this is where Douglas gives us this powerful, game-changing analogy. You have to learn to think and act like a casino. Let's really break down what that means.
First off, you need an edge, but let's be crystal clear about what an edge is. It is not a guarantee. It's not a crystal ball. It is simply a statistical advantage, a situation where there's a slightly higher probability of one thing happening over another. That's it.
So look at this contrast. The average trader acts like a gambler at the table. They're emotional, they feel like they need this one trade to work out, and every loss feels like a personal failure. The professional, on the other hand, acts like the casino. They're systematic, they know their edge only works over a large sample of trades, and they see losses for what they are, just a cost of doing business.
You see, the casino knows it can't predict the outcome of any single spin of the roulette wheel. It's totally random. But they also know that over thousands and thousands of spins, their small statistical edge on every bet is a mathematical guarantee of profit. They just execute their system perfectly, without emotion, time and time again. That is the model for a master trader. Let's just put some simple numbers on it. Let's say your edge gives you a 60% chance of winning. Well, you could easily lose the next 4 trades in a row. That's just random distribution. But over 100 trades or 1,000 trades, That 60% edge is going to make you consistently profitable. It's all just a numbers game.
All of this builds to what is probably the final and, frankly, the most difficult step in the whole process. See, it's one thing to take a risk by putting on a trade. It's something else entirely to truly accept that risk. This quote really gets to the core of it. Clicking buy while secretly hoping and praying that the trade can't possibly lose, that is not accepting risk. True acceptance means you have fully, deeply, on a gut level acknowledged that the outcome is totally uncertain, a loss is a very real possibility, and you are completely okay with it before you even get in.
And to get there, Douglas gives us these 5 fundamental truths to live by. Once you truly internalize these beliefs, that literally anything can happen on any given trade, that you don't need to be a fortune teller to make money, that your wins and losses are going to be scattered randomly, that an edge is just a small probability tilt in your favor, and that every single moment in the market is unique, once you believe all that, fear starts to lose its power over you.
So in the end, the objective itself gets flipped on its head. You have to stop chasing the impossible dream of never losing. Instead, you start working toward the very achievable goal of trading without fear. Because that is the only state of mind that allows you to execute your edge consistently over time.
So let's wrap this up. What are the big takeaways? Number 1, trading success is a game of psychology, period. It's not about prediction. Number 2, you have to shift your focus from analyzing the market to analyzing yourself. 3, adopt a probabilistic mindset, just like a casino. And finally, you must learn to truly accept risk. That's the key to eliminating fear and finally achieving consistency.
And that leaves us with one final crucial question to think about. When you approach your trading, what are you really trying to do? Are you trying to master the infinite, uncontrollable chaos of the market? Or are you working to master the one and only thing you can actually control, yourself?